Hello, everyone, and welcome back to the Bull Standard. My name is Peter Dwan. I also go by the Twitter handle BTC Bullwriter. And today I have the two gentlemen leading Smarter Web Company, UK's #1 Bitcoin Treasury Company. Before I introduce those two, just some housekeeping notes. Please, if you have any questions, type them in the Q&A. In the chat so that at the end we can hopefully address some of the questions. And without further ado, welcome Andrew and Jesse.
Thanks, Peter. Good to see you again. And we were just talking that it's going to be awesome and that we're going to meet in person 48 hours time.
That's right. That's right. Yes. For those who are on the live stream, we would love to meet you in person at the Unconference event in New York, hosted by Tim, and Sailor will be the headliner. So we'd love to meet as many of you guys as possible. Now, why don't we jump? Oh, sorry.
I think it's the start of Bitcoin taking over Wall Street. You know, there hasn't been haven't been Bitcoin conferences in New York. Now I think it's the beginning of us making our presence known in Manhattan.
Yes, exactly. It's going to be very exciting and the first of many. So want to be respectful of everybody's time, including those who are attending the live spaces. So why don't we just jump in? It's been roughly about a month since we last spoke, and obviously the price action hasn't been great, but that is no reflection of how much activity you guys have been doing in the background. So one of the most important is the fact that you brought on a new CFO and other personnel. Andrew, why don't you start off by kind of giving us an update on the personnel side?
Yeah, so we announced 2 weeks ago today, that Albert had joined us as the CFO. Albert's got an incredible career pre-joining us, hopefully an incredible career post-joining us as well. The important thing about Albert, though, is that he's a decent, hardworking person who's got FTSE 250 experience in a CFO role. So with our ambitions of where we're heading, that's really, really important. I'd also like to mention Mario, who was doing the CFO job before. You know, he stayed in the company. It was his decision to a degree that we recruited an experienced CFO who could take us on, you know, that next leg up. And I think that's an incredible testament to what Mario's like as a person and the way that he's put the Smarter Web Company first. On top of that, we've also had two other people join. So on the same day as Albert, Lily joined as a marketing manager. She's working on both the operating business and the PLC. She's already helping us massively. And then a week later, we had Laura join as my, still struggling to say this because, you know, it sort of sounds a bit sort of above yourself, but as my executive assistant. But joking apart, she's an absolute lifesaver because I get a lot of emails. I have to see a lot of people. And even that alone is quite difficult to manage. But then she's also helping with some of our processes, with some of the other people in the team. And all that sort of stuff. So, you know, that's quite a lot for a company to have another 3 new people in quite a short space of time. But it's because of the path that we're on, which is trying to make the company into one of the biggest companies in the UK.
I love that. So just jump in real quick. Ultimately, the goal is to get into the FTSE 100, which, according to the Financial Times article that I read, probably will require for you guys to be in the $4, $5, $6 billion range. So why don't you talk a little bit about the difference between where you guys are now and there, and what are kind of the necessary steps to ultimately be included in the FTSE 100?
Sure, I'd probably take that one. So in the UK, you've got 2 stock exchanges. You've got the London Stock Exchange and you've got the Aquis Exchange. We're on the Aquis Exchange. We're by far the biggest company on the Aquis Exchange at the moment, by far the most liquid company. If you add those 2 exchanges together, we would probably be, I don't know, somewhere between 100 and 200 in terms of liquidity. So it's pretty good, but it's obviously not the top yet. If you looked at us by market cap right now, we're a little bit away from being in the FTSE 250 if we were on the LSE. So what you've got in the UK is you've got the FTSE 100, and then after that you've got the FTSE 250. And if you add the two of them together, you've got the FTSE 350 basically. So it's the 350 biggest companies by market cap. Now, without stating the obvious, you can't be in the FTSE 100 or the FTSE 250 if A, you're not on the London Stock Exchange, and B, you don't have a suitable market cap. Unlike, say, the S&P in the States, the London indices don't have that requirement where there's any subjective, requirements put in. It literally is your market cap and your 20 days liquidity enough, and then providing it's at the right point, you're in. So we probably don't want to talk about it too much more than that, other than the facts of what it takes to be in the FTSE 100 or the FTSE 250, and the reality of where we are this very second. And that's probably a fair summary, isn't it, Jesse?
Yeah, it does create a sort of interesting possibility that so obviously strategy has run into the realities that S&P 500 inclusion is based on committee and based on opinions, whereas in the UK it is based on rules. And so it's quite possible that Smarter Web could end up on the FTSE 250 or even the FTSE 100 before strategy ends up on the S&P 500.
Interesting.
Depending on how things play out for both companies and how entrenched those opinions are on that S&P 500 committee in particular.
Got it.
My gut feeling, not that you asked for it, is that we get in the FTSE 250, and I love strategy, of course. I've got shares in strategy, bought some more today. We get in the FTSE 250 before they get in the S&P, but they get in the S&P before we get in the FTSE 100. And I reckon that they'll be in the S&P in the not too distant future. That's my opinion.
Got it. Jesse, I want to pivot to you. And again, for those who are not familiar with Andrew and Jesse, Andrew is the CEO of Smarter Web Company, and Jesse is the head of Bitcoin strategy. So Jesse, as you know, we are currently experiencing a mini bear market in the MNAV compression of Bitcoin Treasury Companies. I really think that it is in the bear where you get to really separate the winners and losers in each cycle. And as you said, there's a winner takes most mentality in this space. So what have you learned from the Bitcoin strategy side during this mini bear?
Yeah, it's been, you teed it up perfectly there, because I think what's been most interesting, I think that the market has to find a way to test the strength of various companies. The Bitcoin Treasury Company narrative was extremely hot in Q2. And it made it easy for anybody to raise money, and announce they were going to become a Bitcoin Treasury Company. In the UK, that meant that there were like 25 different companies that popped up right after Andrew pioneered this model in the UK, and they all purported to, be we're going to be the next Bitcoin Treasury Company. We're gonna race to compete with Smarter Web, and over the last few months, the tide has gone out, right? I think still most of those 25 quote unquote Bitcoin Treasury companies in the UK still don't own any Bitcoin. And I think that's it shows you how you can have the intention to raise a bunch of money and try to, pivot your strategy to be focused on delivering Bitcoin yield for shareholders. But a lot of things can stop that along the way. And execution's hard. And so I think that the tide going out really exacerbates that phenomenon and shows the market which companies have what it takes in terms of infrastructure, leadership, and shareholder backing, shareholder support to continue on that path, and whose flywheels will stop or have stopped. And in the UK, we have a slide in our investor deck that I made 2 months ago that showed Smarter Web and the two closest competitors in the UK in terms of market cap. And when I first made this in early July, Smarter Web was £700 million market cap company. And the two closest competitors were like 100 million and 80 million pounds. And now, fast forward 2 months, and Smarter Web is about half the market cap that it was. So it's hurt, right? But the other companies are like, a fifth or a tenth the market cap that they were. And that, I think that's the reality of what has happened in terms of where we are at in this sort of mini cycle for Bitcoin treasury companies, is when the tide goes out for a strategy that amounts to Bitcoin volatility squared, that can hurt a lot if you're not positioned in a company that has what it takes to survive that and then ride the next wave up. And I think that what has happened in the UK and globally too is that this cycle has been a test of the strength of Bitcoin treasury companies and has shown on a relative basis who is still in good shape and positioned to benefit the most from the return of sentiment. And I think it's quite clear that at this point in time, Smarter Web, it feels like to me, is in a great position of strength on a relative basis, in particular to other small Bitcoin treasury companies that have popped up in the last 6 months. And it puts us in, I think, a great position to take that next leg up and follow the kind of Metaplanet journey that we've seen over the last year and a half from Metaplanet. And I think that would mean for us, kind of evolving from the 2,500-ish Bitcoin that we're at to, maybe quite a bit higher than that over the next 6 months.
I love that. And I think it's either Warren Buffett or his right-hand man, Charlie Munger, who used to say that it's when the tide goes out, you can see who's been swimming naked. And so we have been observing that, in the space quite a bit. I do also want to note that despite the fact that there has been severe MNAV compression, that you guys have been consistent in still building out that Bitcoin stack, which I really commend you. And another thing that has really separated you guys from other Bitcoin treasury companies is that I think out of all the Bitcoin treasury companies, you guys excel the most in communicating with us, the community. And as a result, we are continuously going to believe in Smarter Web by giving you guys the capital to keep you guys above 1 MNAV, so that despite this MNAV compression, you guys are still being able to play this accretive dilution game. So kudos to you guys. I
have another point on that. I think if we're being like tough and fair about what is happening with the sort of bear market for Bitcoin treasury companies is, what is an MNAV above 1x? It's collective investor belief that the company will be able to deliver Bitcoin yields into the future, and that's discounted back into the present, and that's everybody's individual assumptions all collated together into one market consensus. And I think the reality of it is that you deserve an MNAV above 1x if you have a track record of delivering Bitcoin yield, and that is not true for most purported quote unquote Bitcoin treasury companies who pop up and don't deliver that. And that's the reality of, like, there's a big filter of companies that intend to run the strategy and then companies that succeed in running the strategy and have a track record of doing so. And I think that's the cold reality of where we're at right now, is a lot of quote unquote Bitcoin treasury companies don't deserve an MNAV above 1x because they haven't had a track record of delivering Bitcoin yield. And I think that's where Smarter Web does set itself apart from the other small Bitcoin treasury companies, because we have quite a strong track record of not only delivering that Bitcoin yield, but being very transparent and communicating frequently. And I think that shows up in investor confidence that we have what it takes to continue delivering that yield. And that justifies the MNAV above 1x. I think it's the most important thing in a Bitcoin treasury company is putting together those pieces such that investors have confidence that there will be yield into the future, because that's how you succeed. And I think we're doing that, and some others are not.
I could add something to that as well, actually, which is quite interesting. And it's something that I think about a lot, but maybe some investors don't realize the importance of it either. And that follows on from what you guys are saying. And that's, there's two other variables that everyone needs to factor in when they're looking at Bitcoin Treasury Company. So my favorite variable is liquidity. And the reason why that's my favorite variable is because that allows a Bitcoin Treasury Company to have an ATM style facility. So if you look at us, we're incredibly liquid, and that's great. It's great for when you're raising new institutional capital because they need a certain liquidity to invest a certain amount of money. But it's also great because then you can run an ATM. Now, what goes hand in hand with liquidity is the community. So, we all look at MNAV, days to cover, all the different things that, we've got on our website, and a lot of things that we don't have on our website, which we will build into our website in time. But the community is so valuable to a Bitcoin Treasury Company. We often say when we're talking about Bitcoin Treasury Company valuations is that, they're probably the most undervalued equity story in the world ever. Now, if you use that same sort of analogy, you can say that the community is probably the most undervalued, not in my mind, but I don't hear it being talked about in terms of importance enough. So that's probably the most undervalued metric that people don't factor in to Bitcoin Treasury Company valuations, because it's so important. Because what Jesse's saying about the MNAV and the premium, in most cases, or certainly for the good ones anyway, but which obviously fluctuates, as different stages in the cycle play out. But that premium is proof of work at the end of the day. And that's what people need to remember. And the community are the people that say, and this is how it should be, they say to the management, we value what you're doing, or we don't value what you're doing because of your actions. So I'd like to just remind everyone that, when you're looking at a Bitcoin Treasury Company, particularly a smaller one, I wouldn't bother with something like strategy. Look at liquidity. And then for every Bitcoin Treasury Company, look at the community and look at sentiment in the community. That's worth remembering if I can make that point, please.
Yeah. And Peter actually feels strongly about this too. So Peter, I'm going to turn it on you and say, like, what are we missing that you would like to add about, community as a metric?
You're not missing anything. That's why I actually got bullish on you guys. And so the way I see it is, for any company, especially a Bitcoin Treasury Company, there's three types of leverage. There's financial leverage, right? There's technological leverage, and then there's social leverage. Okay. Community is effectively technological leverage and social leverage. Okay. So if Bitcoin companies are trying to generate Bitcoin yield through Bitcoin torque, then your community and social media presence is what I would call your cultural torque. And this is especially important is because I worked in traditional finance for 14 years. I know how they think. I would be very generous when I say that 95% of Wall Street doesn't understand Bitcoin. And I would say 99.99% of Wall Street does not understand Bitcoin Treasury Companies. And so because of that, Andrew, you made a great point that if you are a new Bitcoin Treasury Company, right? And I would obviously exclude MSTR because now they've moved over to the institutional side. And I would say MetaPlanet is pretty much there right now as well. So outside of those two, if you are a new Bitcoin Treasury Company, you better bend over backwards to try to woo the community members. And that's where you guys are head and shoulders above everyone else, and even against MSTR and even MetaPlanet, in my opinion, on how communicative you've been with the community. So kudos to you guys.
Thank you.
Yeah, thank you, Peter. We think that, you and I have talked about this a little bit, Peter, that in my view, it's funny because community is a very secondary metric, and it's even I've been on a podcast where it was where the whole point of the podcast was reasons why Bitcoin Treasury Companies seem like a scam, and pointing to community feels like one of those things from the altcoin days where that was the only thing you really could stand on, and so people would try to point at their community as a good sign. But the reality of it is, like, a community is downstream of all the other things that we're doing. And so all of those inputs of what Smarter Web is bringing to the table show up in terms of attracting interest and investment, and then active engagement from retail investors who are plugged into Twitter and getting all their information there. And so it's very secondary, but it's a great summary of everything that other Twitter savvy investors are seeing, and their pattern recognition is amounting to Smarter Web looks like it's got a great combination of things, and I think that's very telling and instructive for investors as they're doing their homework.
Correct. And also, one other thing that I don't hear many people talking about is the importance of the depth of the capital markets that the Bitcoin Treasury Company is in, right? So obviously, UK is, while not as big as, say, for instance, America, is still a significant capital market, as opposed to like some small, like Southeast Asia countries or Latin America companies. So that is effectively your runway to drive institutional capital as well. And that's actually something that I wanted to slightly pivot to, is that one of the reasons why a Metaplanet of the world or a Smarter Web company of the world is interesting to the locals of your country is the fact that the current crypto laws has been very onerous, and there's just not enough access to, say, Bitcoin, right? So I just saw a couple of days ago that Japan is trying to change the crypto laws from currently 55% to reduce it to a flat 20% by the end of 2026. I wanted to see, is there something similar to that in the UK? And if so, is that a net positive or a net negative for Smarter Web Company?
So when we speak to investors, we always try and explain the concept of Bitcoin yield, or what I often like to call compound Bitcoin, because that's how I explain compound interest to my kids, So compound Bitcoin is a really simple concept, which we all call, Bitcoin yield. So in the UK, historically, for about 5-6 years, something like that, Bitcoin's been very difficult to buy. The banks, most of them, quite unfriendly, and it's made it hard. So you've had a lot of capital in what we call ISAs and SIPs, which is like a retirement account and a non-retirement account. Broadly speaking, the same thing, slightly different tax treatments, where people have had this money and they haven't been able to invest in anything other than strategy and in later days, more other things. But that's changing, and that's really positive. So in the UK, they're announcing ETNs, which is like a poor cousin to the ETF, basically. And I think that'll be October that they come out. And one of our network told me that we had a hand to play in these rules getting loosened or changed, or whatever you want to say. And that's cool if true. But regardless of that, it's cool anyway. It's not going as far as they should go. And as I say, they should have done ETFs. But, it's a step forward, which, that's all you can hope from the UK authorities at the moment, So that's positive. And if you look at what happened in America with the ETFs, fantastic. More importantly for us, though, what that sends out is a clear message to the UK that Bitcoin isn't something that you're not allowed to get involved with. So it's acceptance. So I talk to a lot of people at the moment about, Bitcoin in all different angles, but a lot of the time it's literally about, is it okay, et cetera, And to me, this is like a rubber stamp that's been smashed on top of Bitcoin by the FCA, our regulator, who do a pretty good job, actually, a lot of the time. And they're saying it's okay, everyone. And then what that does is that then cascades out to the institutional investors who can buy Bitcoin right now, i.e. an ETF, if they want to. But what we're trying to get everyone to understand is the concept of compound Bitcoin, which is where whatever happens, and as accepted as Bitcoin gets in the whole country, hopefully, at all levels, you still can't get compound Bitcoin without a Bitcoin Treasury Company. So, it's a pretty exciting time for us all, because you don't get the institutional investors now saying, oh yeah, but the FCA didn't like that and all this sort of stuff. That's gone, that argument. So it's pretty exciting. As somebody that lives in the UK, clearly I'd wish that they did more quicker. Maybe they didn't do some of the things they did in the past, but as long as you get progress, then I think you have to be quite happy with that.
Sure. Let me ask you a little further question. So I presume you guys are talking to financial institutions to, raise capital at Smarter Web. But as you said, right now, because of the lack of an ETN or Bitcoin ETF, yeah, it's not the rubber stamp is not quite there yet. So my question then is, what are the institutions that you are talking to? Are they coming to you, and like, how are you proactively identifying which institutions to talk to so that you don't waste your time, and hopefully create a long-term financial partner the same way that MetaPlanet has with Evo Fund?
Yeah, so these conversations happen all the time, and sometimes they're people that come to us, and sometimes it's where we go to them. Where we go to them, it's almost always through our broker, who do a very good job. Sometimes the inbound stuff comes to them and then they come to us, or just direct through our website. One of the largest possible investors that I'm hoping become an investor soon, they came to us through our website. They filled out the contact form just like anyone else. It's pretty cool, actually. So yeah, that's how the conversations happen. Clearly we're interested in speaking to all the time. The challenge that Jesse and I have is that, time is really precious now. There's so much to do. We both work very, very long days and we both love it. However, time is a precious commodity. So, we're quite good at asking the questions, and our broker are very good at asking the questions, of making sure that when we go and see someone in person, or when we go and see them via Teams or whatever, that it's a valid thing. As people that have watched me talk before, I do go on a little bit. So like yesterday afternoon, on Sunday afternoon, I had a discussion that was booked in for half an hour. It went on for an hour and a half. So time is difficult. But the thing that stood out to me quite a lot is that when we started this, less than 5 months ago, there was a lot of skepticism out there with the model. Now there's a lot of enthusiasm, but for balance, there is also a period of time at the moment, going back to what Jesse was talking about with the MNAV compression, the volatility, whatever's going to happen in the very, very short term in the market. And I think there's a lot of institutional investors that are waiting to get involved. And they're not waiting. Well, some of them wait for a specific thing that I can't talk about, but a lot of them are waiting just to give it a little bit of time. And I know that's very difficult for people to hear that. And that's why it's so fantastic that we've got an ATM style facility that runs on every update, because when we're waiting for some of these pretty awesome checks potentially to arrive, we can still make progress that, is not as good as we hope and as we want. But that's the way it goes sometimes. You'll get some months where they'll be quiet, some months where they'll be absolutely crazy. So we've got the luxury that, I believe I'm correct in saying, that no other company in the UK's got, Bitcoin Treasury Company, or company masquerading as a Bitcoin Treasury Company, in the sense that we can generate that capital as we're trying to secure the right capital. And, the final point before I give someone else a chance to speak is that we've been offered a lot of money in the last couple of weeks, call it the last month, but it's not the right money. And that might be because of the price, it might be because of the structure, it might be because of what we believe their intentions are, and we won't do it. We don't need to do it. We've got a really good, strong company that's growing, not as quickly as we'd like it to grow at the moment, but still probably one of the quickest in the world. But, obviously we always want more. That's how we've driven it to this point that we've got to now. But we have to be really careful, and Jesse and I talk about this all day, every day, about the right capital at the right time. And I think that's what's going to give that long-term beneficial Bitcoin yield effect, to our shareholders. So, there's quite a bit to it, and apologies for going on a bit.
Yeah.
To just add a little color to that, because some people have wondered, like, what does that mean that it's not the right capital? And like, just to provide a little peek behind the curtain for folks, like, maybe they're asking for a 20% discount, and then you're saying, well, like, that's not fair, first of all, but then second of all, like, why are they asking for that? Like, do they just want to do that deal and then hedge out their exposure and then collect that benefit, which would amount to them like finding a way to short the stock? Or, like, those are the questions you start to ask. And then other people want other structures where they want a ridiculously sweet cherry on top, and it's like, well, that's not, you're not aligned, and also that would give away, like, X% of the company a year from now, and that's for free, on top of what's already a fair deal. And then you have to say no to that too. So those things play in here. And to Andrew's other point there of I think that investors on Twitter are sometimes surprised to find out that institutions are impacted by market sentiment. And so I think a lot of the conversations we're having now is people who are interested, paying a lot of attention to the space, also seeing who's been swimming naked, and their short list of who they're interested in is growing shorter, which is great for Smarter Web, frankly. But they're waiting, right? They're waiting for some sort of swing in the pendulum in the other direction. They don't care about nailing the bottom. They're not trying to catch a knife, but a falling knife. But they want to find a good entry point, and that on an institutional scale means missing the bottom, and they're perfectly comfortable with that. So that's another bit of like sort of context. Is I think that's what we're seeing behind the scenes here. Of institutional investors are sniffing around, getting ready, and waiting. And frankly, that means it's going to be led, as it has always been in Bitcoin Treasury Companies. It will be led by savvy retail investors who set the bottom. And I think that's realistically, I think that's probably hopefully where we're at, with our MNAV now at 1.6 as of today. I just checked. And I think that's, in my opinion, reaching a place of ridiculous value in terms of what our track record says. And if you assume any sort of continuation of that performance in terms of Bitcoin yield. So in that sense, it will be retail investors who buy the bottom and set the bottom. And then once momentum starts going in the other direction again, this is part of how it goes really fast in the other direction, and momentum stacks. And it's rather reflexive in this industry. So a little bit behind the curtain in terms of the institutional conversations there.
I want to double tap into that because, as you alluded to, you're saying that institutions do not necessarily need to wait for the absolute pico bottom to raise. So then, are you guys actively trying to time the institutional raise on the upswing so that it is not nearly as dilutive for the shareholders, yet they're still capturing some upside?
Yeah, I think our view there is that it's very accretive right now, and that's the advantage of having a strong track record of delivering Bitcoin yield. Is we're still at 1.6. It's still quite attractive. I think Strategy would be very happy to issue equity at a 1.6 MNAV. I think so it's not that we're trying to time anything to make it more accretive at a little higher of an MNAV. I think that's just kind of the reality of psychology in institutional allocators. Is they're going to end up buying a little higher, realistically speaking, because they, first of all, want to, this is kind of unprecedented for a lot of these allocators, watching an industry emerge so quickly. And things move really fast in Bitcoin Treasury Companies, and they want to make sure that the dust settles. Nobody wants to stake their job at an institutional allocator on catching a falling knife.
Got
right?
it.
Like you want to wait for the dust to settle, and then you're happy to buy a little bit higher. That's me interpreting what I'm seeing, but I think it makes sense in terms of how they're behaving.
What is your guys' general sentiment on these pipe deals? Because I don't want to name any particular companies, but they've been quite, from
Yeah.
my perspective, brutal
I,
to experience. Yeah.
I'll start it off there and say that we've always had the view that the best and only way to go about things for smarter web, the winning formula for smarter web, is to follow the kind of meta planet story of starting small, delivering small, growing that, delivering more, and building organically, and building that investor base, predominantly retail investors who are supportive and see the math and see the vision. And it's an organic growth story. It's a path dependent story of you can't become a large MetaPlanet style Bitcoin treasury company without starting small and building a track record of execution that you can point to help justify a premium because you have a track record of delivering. And for us, it's always been clear that that's the winning model for a company in smarter web shoes. And so we've been focused on that. And there's been innovation in how do you go about it in other ways, which to me has always kind of looked like shortcuts that don't help you get the flywheel going and keep the flywheel going. Because if you shortcut to scale, there's not a track record of delivering, which justifies a premium. And that's the whole strategy here is to have that track record in place.
So I want to hear you guys' opinions on MNAV. So I'll show you my opinion right after I ask you guys. But do you believe if you're a Bitcoin treasury company and you're below one MNAV, that is a opportunity, or is that a death trap?
Well, I think you have to refer back to your previous question, Peter. So if you look at markets, just in general terms, doesn't have to be Bitcoin treasury companies or even Bitcoin. For a market, if you put a lot more supply into the market, then the price is going to get depressed, right? Because the only way that is going to work without the price getting smashed is if you've got growing demand. So I think then if you look at MNAV as an example, you need to think about it in the same context of that. So if something is trading at, let's say a 0.75 MNAV, then there's an opportunity there in a way, but there's also a big risk. And the big risk there is, like say, for example, we acquired somebody that's trading at 0.75. Yes, we're buying something cheaper. We're buying Bitcoin for 75p instead of £1. Yeah. So that's great. But you're also taking something into your shareholder base if you did it with paper, i.e. all share offer. And that might not be so smart, dependent on the shareholder base that you're acquiring, their motivations, etc., etc. So it's not quite as clear cut as everyone thinks, if something's trading below a 1 MNAV, whether or not it becomes a viable deal. Because if you go back to what we were saying also about the community and how fantastic our shareholder base is, including our community, we've got a real asset there in the sense that, they're incredibly supportive, they're incredibly distributed. It's not like we've got, sort of a consolidated, well, we do have, there's some consolidation. I've got quite a large shareholding, but, I'm holding it for a long time, or certainly the vast majority of it for a very long time. But we haven't got like big shareholders that may exit out of it. And like we were talking earlier, the investors that will write sizable checks, they're ones that we believe will be holding it for many, many years. So I think when you go back to the MNAV and you look at MNAV below 1, you have to think to yourself, well, yes, we could buy something here, but is it the right thing to buy? And I think the way that you do that is you look at the impact, and you can't 100% predict it, but you can make an educated, a summary of what that impact is going to be on then the supply of your shares. Because the other thing that we've talked about is the ATM facility and how fantastic it is. And if you do something that then impacts on your share price, then that ATM becomes less beneficial in terms of Bitcoin yield than it would otherwise be. So whilst I'm incredibly impatient, and I'm looking to grow the company as quickly as possible. And I think we'll actually do it, relatively speaking, as I want to do it in terms of the timescales to get to where I want us to be. You do have to make those moves at the right time, because it's a bit like actually, this is quite a good analogy. Actually, I've never used this one. So when you were kids, did you ever get told the story of the hare and the tortoise?
Yes.
Yeah, so maybe some Bitcoin treasury companies have done that. They came out the gate very fast, and then they've been asleep. So joking apart, it is about making the right moves at the right time. This is, as Jesse says this a lot better than me, it's about consistency. Every single day, trying your best to deliver the mission, not, I'll have a great day one day and then I'll do nothing for 2 weeks, that just doesn't cut it to me. So yeah, that's my view on MNAV. It's not a clear cut. If you can buy, a company at 0.8 MNAV after fees, because it costs fees to acquire it, whether that's a good thing or not, you got to think about the other aspects of that transaction.
Got it. Yeah, the way I think about it is interesting. It's if there is a company that in the bear market is below 1 MNAV, for the majority of them, it's actually better for their shareholders to actually just sell the Bitcoin, right? Because they don't have a massive enough stack that will move the Bitcoin capital markets. Like obviously if you're MSTR, that would do it, right? And then I also ran the analysis in Grok where it's like, all right, if you do an all cash deal, a hybrid cash and stock deal, or all stock deal, an all stock deal, especially if you're the acquiring company and you have a above 1 MNAV, it's extremely dilutive, accretive, extremely accretive. However, I didn't think about the one aspect that you brought, Andrew, which is very interesting, is not only are you acquiring the Bitcoin, but you're also hopefully acquiring the investor base as well. And that is a qualitative part that cannot be modeled out, but rather it's more of a feel. So that's a very interesting concept. And obviously we'll have to wait in a, unfortunately, an inevitable bear to see how that plays out. But I want to talk about specifically smarter web during the bear market. Is your guys' objective to have to be above 1 MNAV at all times in order to play this accretive dilution game? I know it's not something that you can fully control, but is that how you guys are thinking about it during the bear market?
No, I first of all, we're aware that the market will give us what we have to then work with at any given time. And, strategy in 2022, I think maybe 2021, 2022, I think was under 1x MNAV. That's the strongest Bitcoin treasury company in the world, and they were under 1x. So maybe it'll happen, right, for everybody. I think there's different things you can do at different times. Kind of to your original question, I think in a funny way, the lower you get under 1x MNAV, the clearer opportunity you have with particular levers, which could be interesting. Like for example, and again, we haven't had to think about this a lot, so we haven't fully explored all these strategies, but we're vaguely aware of and collecting options that we would dig into more to figure out what was right for our company in those certain conditions. But one possible thing that I think could be interesting is if you're at like a 0.7 or something quite low, could you do a Bitcoin denominated convertible note to raise dollars to then buy your own stock, which would be effectively buying Bitcoin at a discount using an obligation in the future that also is mitigated downside risk because of its Bitcoin denominated. So that's an example of how you might approach that scenario. The 1x, if you're actually stuck at 1x, it's in some ways possibly trickier. That's where though convertible notes at a premium, and you could shift the terms of a convertible note to focus more on the premium, make it more attractive to the investor in certain ways, so that you can make the conversion premium higher. And if you issue, let's say it's at a 25% conversion premium, but you're at a 1x MNAV, well, you're effectively at a 1.25 MNAV for that transaction, and that's a way where you can get the flywheel going, and then that starts to justify being above 1x MNAV again. And then of course there's always the option, the BATNA here, the thing where you don't have to do anything. That's your worst case scenario, is keep looking for something that's better than doing nothing. And we can always do that in a scenario where our MNAV gets too low, and wait for conditions to change. That's essentially what Strategy did in 2022, and it worked out just fine for them. They were they had 200,000 Bitcoin, and they were at under 1x MNAV, and then a year or two later they were at a 4x MNAV. So sometimes it just takes the tide turning.
Yeah, that's interesting. And so I want to, and the reason why I bring up the bear conversation so much is I actually believe, at least from my selfish perspective, that if you're a Bitcoin treasury company who openly communicates that you have a bear market strategy, that will then stay in the mindset of the retail investor base, that inevitably when a bear comes, that we want to put capital with you guys as opposed to someone who doesn't have a bear market strategy. My question then is, how do you guys think about, I think you briefly mentioned it, are you in the sailor camp of never sell your Bitcoin, and therefore you do, as you mentioned, the convertible bonds so that you can do share buybacks? Like, how do you guys think about never sell your Bitcoin?
Yeah, it's certainly not something that I'd be ever supportive of doing. I'd never say never, because sometimes things happen, and you've got to make decisions at the time. But it'd be very, very hard for me to have any support for a strategy that involved selling the Bitcoin. So, the one that everyone talk about is selling the Bitcoin to buy the stock back. I just don't think in the UK buybacks typically work very well. It's not like in the States where, buybacks have, from the big tech companies especially, have been, pretty incredible actually in terms of pushing the share prices higher. It's not like that in the UK. And like, I would prefer to have a few more shares in issue and to have the Bitcoin intact. I wouldn't do it. So I wouldn't say never, but it's certainly not something that I'd be supportive of at all of doing. I suspect with some of the companies that are failing, I suspect you will see exactly that. But people shouldn't worry about that because they own bugger all Bitcoin anyway. So it's not like it's just like somebody with a bit of Bitcoin selling it into the market. The Bitcoin market can handle tens of thousands of Bitcoin, let alone 100 Bitcoin or something. So I don't know. I'd be interested for Jesse to give his views, but that would be my summary.
Yeah. We strongly view it that way. Our goal here is to accumulate Bitcoin and put the company in a position of unique strength in the UK as having the largest Bitcoin balance sheet. And our view is that is digital capital for the digital age, and will make Smarter Web the best capitalized business in the UK. So that's where we're trying to get to. And selling Bitcoin for any reason along the way hurts that objective. And that includes, we closely follow the ideas that the investor community are coming up with about strategies you can use, in various scenarios. Recently, there was talk about what you might do under a 1x MNAV. And one of the main topics was like Bitcoin dividends, because you're not a closed-ended entity, you can distribute Bitcoin dividends. There's precedent for it. And that could be a way to protect the 1x MNAV. It's a credible threat that if you're going to distribute dividends, then why trade at 0.7 MNAV? It should be 1x. And that's in theory a fine idea. I think that the conversation around that was missing how the second order effects of how that harms the business after you complete that kind of transaction. If you drain the treasury of Bitcoin, you set yourself back in terms of where you're trying to go. This strategy globally is about trying to become the micro strategy of your capital market, right? And that means being the best capitalized Bitcoin business and having the best balance sheet for the most creditworthy balance sheet to offer preferred equity instruments and whatever other instruments allow you to continue the Bitcoin yield strategy, in particular by tapping the fixed income market. So the goal here is not to drain the treasury. It's instead to retain that and then keep adding when it's attractive and constructive. And so I think that's probably the piece that I think was missing from that conversation is like, okay, that in the near term that can help, but does it harm the strategic objectives of the company? Are you better off sitting on your hands the way that strategy did in 2022? And it worked out great for them to not, distribute Bitcoin and to try to protect that 1x MNAV when they went under it. So, that I think that's the other piece that I would add.
Yeah, I completely agree. And one other thing to add is Bitcoiners are very, very logical, analytical people, but they, from my observation, don't think that hard outside of, hey, does it pencil out? And why that's important is because another thing is, while technically speaking, issuing a Bitcoin dividend will be, short-term accretive, it's also not very feasible because it creates a lot of friction, right? Like some accounts don't allow for it, and it just adds a lot of complexity. So I asked you guys these bear market questions because I really wanted to see how you guys think about it. And just off the cuff, I think I came very impressed with the fact that you guys are always keeping a pulse on the community, and you're seeing all these various strategies that have been offered up. And it sounds like you guys actually already thought about it. And as a fundamental Bitcoiner myself, I love the fact of never sell your Bitcoin. And so you guys have articulated that very well. Now, I just want to, for those who are still in the live spaces, to open this up to questions. I don't see any questions in there, but just one last question while we wait for potential questions in the chat is, how do you guys think about Bitcoin purchases? Because inevitably, while we may not have those very violent blow off tops, we may or may not within Bitcoin. Are you guys also in the sailor camp of, I will always buy Bitcoin at the top, or are you strategic with your Bitcoin purchases?
No, so we'll buy Bitcoin, and everyone can see this from what we've done. We buy Bitcoin almost as quickly as we can. The only reason, which everyone knows now, for the first, let's say, 6 weeks, where we spread it out for up to, say, 2 weeks, it was all part of the plan, all part of the strategy. Because when you're tiny right at the start, what if you buy some Bitcoin and then, and you know that you want to raise some more money next week and the price moves against you? That's why we spread it out in the early days. No more complicated than that. What we do now is we try and buy Bitcoin as quickly as we can. Funnily enough, I haven't got around to talking about Jesse to Jesse yet about this, and this won't happen in the next week or two. But at some point in the not too distant future, I want to get to the stage where we can actually announce our ATM subscription proceeds every week rather than every 2 weeks, because then everyone knows that there'll always be a purchase every single week. So I don't think it'll be a million days. I don't know, see how the market pans out, but maybe let's say 3 months. And then when Sailor's sticking his tweet out every Sunday, we'll be sticking our tweet out every Monday with our announcement every Tuesday, because we do the subscription stuff every Monday. And then all of the other things that we do around that, the lumpier bits of capital will be, bang, 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 whenever they come in. But then everyone always knows that there's that to follow. So, but very directly with your question, our job, when the cash settles from the trade, and it depends how it all gets done, how quickly that comes in, we get it in there as quickly as possible. And we don't look at the price when we're buying it. We buy it regardless of the price. If it's up, down, nothing, makes no difference to us. So yeah, we're not trying to time anything. We're just trying to manage the treasury, as we've told everyone that we're doing, which is a Bitcoin treasury as the business grows.
Got it. We do have a couple of questions. This is from I don't know if I'm mispronouncing Sasha. He asked, "Hello guys, how would you turn Metaplanet investors into smarter web investors? With which arguments?"
Yeah, first of all, I think that the three most compelling companies in the world right now, in my personal order here, are Smarter Web number one, Metaplanet number two, and Strategy number three. Uh, that to say, I think that Metaplanet's a fantastic business, and personally, I probably wouldn't be trimming from Metaplanet because of that. But instead, I might be looking at elsewhere in my portfolio and saying, what am I holding that's not as good as Metaplanet, and and what is where does Smarter Web possibly fit in? I think in how I think about it is that a Bitcoin treasury company, a well-run Bitcoin treasury company, uh, exists in one of a few life cycle stages. I think right off the bat, uh, you have to get to, call it 1,000 Bitcoin, and that's kind of stage zero, right? Like, do you have what it takes? Can you get your infrastructure and machinery humming? To get the flywheel turning, to get enough investor support that you can accumulate 1,000 Bitcoin. After that, I think it's kind of a process of growth, in particular through like an ATM style instrument as your base layer, plus have the complement of lumpier, larger, sometimes institutional raises to complement that. So you got your your low level constant ATM style fundraising and your lumpy equity issuance often with institutions. And that's, I think, what it takes to get to kind of Metaplanet, right? 20,000 Bitcoin, call it. And then beyond that, you start to evolve into strategy. Which is what we're seeing with Metaplanet right now. But the important part is that uh, when I think about what's the most attractive thing to invest in, it's something that's growing fast, right? And that's relative to how much Bitcoin you already have, in particular, and the growth rate that you're able to achieve based on that denominator, that base already. And that puts Smarter Web, in my opinion, in a extremely compelling place where we've gotten through the de-risking of getting to 1,000 Bitcoin. We've proven that we have what it takes to run the strategy and deliver Bitcoin yield to investors. And that's all running, right? We have the ATM-like instrument, and we have our other lumpier fundraisers going on as well. And that puts us, Metaplanet started the year with 2,000 Bitcoin. We're roughly at that level right now. 9 months later, Metaplanet has 20,000 Bitcoin, and they're about to buy 10,000 Bitcoin more. And so, that's what's possible in this life cycle stage that Smarter Web has now graduated into. And again, we've talked about how most Bitcoin treasury companies in the UK in particular never actually bought any Bitcoin. They never got off the ground. They never made it through at that first stage, that stage zero of proving yourself. Smarter Web has proved itself and is now at a very exciting place. I think a de-risked kind of sweet spot, a Goldilocks zone where you're still small, but you've proven that you can, you have what it takes to run the model. And we see the path in front of us to grow the way that Metaplanet has, running the same, strategy that Metaplanet put in place. We have the same tools running, and it gives us quite a clear runway to get to that scale. And then, we'll evolve into, hopefully, we'll be able to evolve into strategy the way that Metaplanet is now starting to do as they've graduated into the next, as they're currently sort of transitioning into that next stage for themselves. But that's how I think about it. And I think that, the investor's job, as Paul Tudor Jones put it, is to be on the fastest horse, right? And that's about growth and growth rate relative to your starting point. And I think that's where we have an advantage. And that's why I put us as the most compelling business in the world right now, because we have de-risked. We've got a clear runway, but we're still smaller than Metaplanet, and that gives us a lot more room for growth and, hopefully delivering Bitcoin yield to shareholders.
Yeah, I just want to echo a point that Jesse made actually in our previous podcast, which a light bulb moment for Jesse himself was he asked Saylor, "Hey Saylor, if you're saying that Bitcoin is the best investment, why should I sell my Bitcoin or not just only acquire Bitcoin and instead buy into MSTR at that point, right?" And Saylor said, "Well, if Bitcoin is your risk-free hurdle rate, then there's a part in your portfolio for risk. And as anybody with a portfolio, right, you have your Bitcoin and then you have gradients of risk and reward. And so as Jesse would say, right, if everybody here agrees that MSTR is an 800-pound gorilla, that's not going to be surpassed in a total Bitcoin holdings perspective. But at the same time, because of the law of large numbers, you're just not going to experience that much growth, right? Metaplanet is, just two steps behind MSTR, but the benefit of that is that they have a much smaller capital base. And Smarter Web, out of this whole entire spectrum of new Bitcoin treasury companies, is just another iteration from that. So that's exactly how I view it, and I structure my portfolio like that. So hopefully that was helpful. Just two more questions. One is, what events do we have on the calendar for the rest of the year?
Okay, so there's quite a lot going on at the moment. So Jesse and I will be in New York tomorrow.
As well as, so I'd love to meet you guys.
Yeah,
looking forward to it.
Yeah, and then at the end of October, I'm going by myself to Singapore because obviously we do look after the costs that we spend. We try and get everywhere, but it does cost money to fly places. So that's something that some people gave me a bit of stick for. Token 49, but I believe it's my job to go out and speak to an unfriendly audience. Hopefully they'll be friendly, but potentially unfriendly, who like other things in addition to Bitcoin, and tell them why a Bitcoin treasury company is by far the best Bitcoin treasury company in the world, in part because it's the only asset that you can actually build a treasury on. But I'll fine tune that messaging before I get there. So that's the next event. Then if we go into October, there's an institutional event in the middle of October, which I don't know has been published yet. So I'm quite looking forward to that one. And then going into November, there's an event in London, which again, I'm not sure whether it's been published yet, but that should be quite good. Closely followed by Bitcoin Amsterdam, which Jesse will, all being well, be flying over for. So that'll be the two of us, going around and speaking to everyone again. We might have a special event, very, very shortly after that one, which again, we're not allowed to talk about. So that should be quite good. Then looking into December, we've got an event that I'm very much looking forward to. Don't know yet whether Jesse will be there for reasons that we won't go into, I'm not sure whether he'll be able to travel then. I hope he can. He's more than welcome to come, but if he can't, then I'll do my best without him. So that's my friend's event, which is in Abu Dhabi, Bitcoin MENA. Greg puts on a fantastic event, probably the best Bitcoin event in the world. So yeah, looking forward to that one. And then I'm sure there's lots of other things. This weekend, as soon as I get back from New York, I'm going to a UK event, which I'm very excited about because all the international events are awesome, but there's not that many events in the UK relative to the ones abroad. So there's one which is in a place called Bury St Edmunds. It's quite a long way away from where I live, and I'm going there directly from the airport on Saturday. So apologies to everyone if I'm sort of asleep when you see me there. And then I believe there might be an event that's being organised round about in the middle of the UK. Can't remember whether that's October or November. That'll be quite good. That's run by someone called Jordan, nice bloke as well. So there's lots of things going on, but I suspect that the diary will fill up considerably more than that. So that's a quick summary. Lots going on.
Wow. Yeah, it makes me a little bit grateful that I'm not working for a Bitcoin Treasury Company, because you guys are just running at all cylinders.
Best job in the world.
It's the best job in the world. Okay. Well, one last question, guys, before I let you guys go. Hey, guys, how do you feel about selling a small amount of Bitcoin puts based upon relevant variables?
You want me to answer that, Jesse, or do you want to do it? I'm happy.
Yeah, but if you've got thoughts on I guess it's probably cash secured puts like Metaplanet does. Yeah, Andrew, yeah, go for it.
Okay, so I don't think for a Bitcoin treasury company, until you get to a certain scale, that's the right strategy, because you should be focusing on adding Bitcoin to your balance sheet, generating the Bitcoin yield at that point, in my opinion. Now, at the size that we are, I think it's an incredibly interesting strategy. And I think maybe for the next 6 months, 12 months, something like that, maybe even longer. But for the scale that we're at, I think it is quite an interesting strategy for a small amount of your treasury. So let's say you did a raise for, I don't know, call it £50 million, yeah? So if you took 10% of that raise, £5 million, and allocated to that strategy, I think it would be quite beneficial, because you could also use that that income, to improve your balance sheet, to cover some of your corporate costs and so on and so forth. But the hidden benefit that you get from that, in addition to obviously creating the revenue to cover that, which is what we're doing with the operating business as well. But the hidden benefit is you can use that cash if you get into a bear market to then that's the one thing that I would consider buying back the stock, in with cash, as opposed to with Bitcoin. So it's quite a good strategy, but in my opinion, we have debated this one. We debate everything as a team. In my opinion, it's your sort of, call it 2,000 to 10,000 Bitcoin, that sort of range, where that sort of strategy is sort of probably quite good. And being completely transparent, I haven't thought about, once you get say to 10, 20, 30,000 Bitcoin, whether that strategy's got a role. But, rest assured, in plenty of time before we get to that point, we will have worked out whether it's appropriate then. But definitely not for a small Bitcoin treasury company, but for one our size, probably.
Yeah, and the other thing in there is, we know that there's a lot of opportunity cost for that capital, because you could be holding Bitcoin with that capital. I think it's worth pointing out that the context for Metaplanet and why it makes a lot of sense for them, they have this additional benefit of, or really kind of existential need to show positive income. And that was necessary in the first year in particular to get off of, I guess they were sort of like blackballed from certain, I forget, what channels required them to have, positive income before they could be, offered to retail investors or whatever it was. But I think in Japan, culturally, it's very important to show that you make a profit. And with the hotel business, they didn't have that. So they needed this sort of Bitcoin operations business, as they call it, to generate a profit that would benefit the overall strategy, to such an extent that it made it very much worthwhile.
And you also have to factor in the tax. So it's not exactly the opposite of that, but it's almost the opposite of that in the UK, where you'll effectively incur that additional income above your base costs as a business, would effectively be liable to corporation tax then, you see. So like Jesse says, the opportunity cost of not holding the Bitcoin then creates an income after your costs, a profit, which you pay corporation tax on. So, I think, and maybe this is something we discuss on an open forum with investors, is how do they feel about paying, effectively risking not having so much Bitcoin, but then, taking some of that profit and then paying it out to the government when it could be held within the business. But the sweet spot for me is basically just a little bit more than your cost. So yeah, you might pay a little bit of tax, but a minimum amount, but then you're not doing it just to cover your costs. You're doing it, it's like an insurance policy. But then you can also argue that that insurance policy, if it's say 5 million against a treasury of say 500 million, it's such a small amount. Are you ever going to buy that much stock back with a couple of million quid? So it's more complicated. And Jesse made the point earlier with something else, that a lot of these things, it's our jobs to think these things through from every little angle. Because a lot of the time, and I'm guilty of this as well, I'm always messaging them mega early in the morning saying, I've come up with this idea. What do you think about this? They probably look at that phone and think, oh God, here we go again. But a lot of these ideas, until you debate them through as a team with loads of different opinions, like take Albert, our new CFO, very experienced in tax, international tax as well. You need the perfect solution for all of these things. And that's why if we take a step back and we look at our business model at the moment, the strategy, as far as I'm concerned, is as close to perfect as you can get. And it's simple.
Got it. I just do want to add in my thought before we wrap up. The one thing that I didn't hear you guys mentioning is the fact that MetaPlanet, at least, is going to use some of the cash secured puts income towards paying the preferred dividends. Which again, the preferred dividends, I hear many people talk about it. You need at least about $1 billion worth of Bitcoin before issuing preferreds. So I don't know if once you guys cross that threshold, then issue preferreds and then use the cash secured puts to pay the dividends, whether you'll need to be liable to corporate tax. I'm not a tax expert, but that's just something that I want to bring up. Okay, well, perfect. Thank you guys so much for the time. This has been wonderful. Again, my name is Peter Dwan. I go by the Twitter handle BTC Bullrider. This will be available on my YouTube channel called Bull Standard, and I will be summarizing this in the next couple of days. Hopefully, I get to meet as many of you guys in New York as possible. Until then, take care.